Hello everyone, welcome to Cheongfuli Weekly Report. We bring you the latest price and market analysis of China's steel market every week. Spot prices trended weaker this week. As of press time, rebar spot prices fell 20 yuan per ton week on week, while hot rolled coil (HRC) spot prices dropped 30 yuan per ton week on week. Market trading sentiment weakened from the prior week, with overall trading activity continuing to cool down. From a macro perspective, the US and Iran have signed a memorandum of understanding. Under the agreement, both sides will permanently cease all military operations across all fronts, achieve a comprehensive ceasefire, and lift the shipping blockade on the Strait of Hormuz. Geopolitical risks have eased substantially, triggering a sharp correction in international crude oil prices. Meanwhile, the US May PCE YOY rate topped the 4% threshold, further lifting market odds of Federal Reserve interest rate hikes this year. Domestically, a coal mine gas explosion occurred in Qinyuan County, Shaanxi Province, prompting full production suspension and self-inspection. The first mine in the county has now resumed operation, with production resumption progress faster than expected. On the supply side, total steel supply edged up slightly. Total output of the 5 major steel products stood at 8.5891 million tons this week, down 91,100 tons week on week. Meanwhile, molten iron output posted another modest weekly gain. Given current steel mill profit margins, molten iron production is set to stay elevated in the short term. By product, rebar output slipped slightly to 2.1325 million tons, a week-on-week decline of 54,800 tons. HRC output also edged down to 3.0052 million tons, falling 21,400 tons week-on-week. Demand saw a notable contraction, with apparent steel consumption reaching 8.1494 million tons this week, a week-on-week drop of 562,600 tons. Breakdown by product, apparent rebar consumption hit 1.8875 million tons, down 320,500 tons week-on-week. Apparent HRC consumption stood at 2.9211 million tons, rising 97,200 tons week-on-week. After temporary demand recovery driven by pre-holiday restocking last week, market sentiment toward future prices remains relatively bearish. Purchasing volumes continue to shrink this week, and speculative demand stayed muted. In terms of inventories, total stocks of the 5 major steel products rose sharply this week, hitting 16.0099 million tons, up 439,700 tons week-on-week. Product breakdown, rebar inventories reached 6.8339 million tons, rising 245,000 tons week-on-week. HRC inventories stood at 4.2969 million tons, up 84,100 tons week-on-week. Overall, China's domestic steel market weakened this week. The decline in steel output was smaller than the drop in demand, leading to further inventory accumulation and a sequential deterioration of fundamental conditions for the sector. On the macro front, markets have fully priced in easing Middle East tensions, and crude oil prices have lost their cost-supportive effect on bulk commodities. Molten iron output remains high at present, yet domestic downstream demand is gradually entering the off-season, leaving limited room for further increases in end-user construction and purchasing activity. Potential pressure on the domestic supply-demand balance is building up. Market expectations for the steel outlook remain pessimistic, and steel prices are projected to fluctuate under downward pressure in the near term. Going forward, key monitoring points include shifts in steel supply and demand, as well as coal mine production resumption progress. Based on the above analysis, operational recommendations, purchase steel strictly on an as-needed basis to mitigate inventory risks. Institutional views hold that the traditional peak demand season for steel is now in its late stage. Rising rainfall will further dampen demand and exacerbate supply-demand pressures. Nevertheless, raw material prices will remain supported in the short term amid safety inspections at domestic coal mines. Steel prices are therefore expected to trade sideways with volatility. In summary, steel prices will generally fluctuate on a weak footing. Close monitoring is required of changes in steel inventories and domestic coking coal supply. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.